The crypto market today is walking a fine line between recovery and uncertainty. After several days of mixed movement, traders are watching every chart and update with growing tension. Bitcoin is trying to hold steady after recent resistance, hovering just above the psychological mark that has kept buyers and sellers in constant battle. There is energy in the market, but also hesitation, as investors wait to see whether this is the start of a larger rally or just another pause before a pullback. Ethereum is showing similar patterns, holding its ground but not pushing hard enough to confirm a strong bullish breakout. The behavior of these two giants is setting the tone for everything else that follows, because when Bitcoin and Ethereum stay quiet, the rest of the market gets restless. Behind the scenes, a bigger shift is taking place. Institutional digital asset treasury firms have started to rotate their funds away from traditional leaders like Bitcoin and Ethereum and into smaller, more volatile coins. These moves are being made quietly, but they carry big implications. When professional money managers begin hunting for higher returns in fringe tokens, it means two things at once. Confidence in the big names might be fading a little, and the appetite for risk is returning. This type of shift can create fast profits but also sharp losses, and it is one reason volatility could rise sharply in the coming weeks. The overall market is trying to recover from its recent correction. Market capitalization is showing signs of stabilizing, suggesting that the selling pressure has cooled down for now. Analysts believe that if this base holds, a new wave of buying could begin, particularly from retail investors who have been sitting on the sidelines. There are already signs that sentiment is improving slightly, with traders paying closer attention to altcoins that have shown early signs of strength. One of the coins catching eyes today is Uniswap. It has seen a solid burst of activity and continues to appear among the most searched and most talked about assets across multiple platforms. The strong interest around it suggests that traders are speculating on a possible breakout, and its trading volume reflects that momentum. Such attention can create a self-reinforcing cycle where visibility fuels demand and demand pushes prices up, at least in the short term. Still, it is important to remember that what rises quickly can also fall just as fast, especially when the market mood is unstable. In contrast, Zcash is feeling the opposite pressure. It has been one of the notable underperformers recently, giving up a large portion of its earlier gains. The weakness there seems to stem from profit-taking and fading enthusiasm after a brief period of hype. Some traders jumped in late expecting a rally, but the lack of follow-through volume turned that hope into losses. This is a reminder that trending lists often show not only winners, but also those coins that are losing ground because traders are rushing to exit. The larger story in the market is one of divergence. While Bitcoin dominance remains high, it has started to slip, giving a hint that the altcoin season might be forming quietly underneath the surface. When Bitcoin stops moving sharply, capital often flows into smaller coins looking for better percentage returns. That behavior seems to be repeating itself now. A handful of lesser-known tokens are attracting attention from both individual investors and professional desks, creating pockets of strong movement while the big coins rest. From here, the next few days could set the direction for the rest of the month. If Bitcoin manages to break out decisively and hold above its resistance zone, optimism could return quickly and push the entire market higher. That would bring renewed strength to coins like Uniswap and other high-momentum projects. On the other hand, if Bitcoin fails again and drifts lower, the risk of another round of selling will rise sharply. In that case, many of the recent gainers could turn into fast losers. There is also a middle ground possibility where the market trades sideways, allowing smaller coins to keep fluctuating in wide ranges without a clear trend. Traders are being advised to stay patient and alert. With institutional players experimenting in fringe tokens and retail investors chasing short-term opportunities, price swings can be extreme and unpredictable. Technical indicators such as moving averages and volume spikes are becoming more meaningful than news headlines alone. Sentiment can shift in hours, so risk management is the key. Experienced traders are trimming position sizes and waiting for confirmation before committing to new trades. Many analysts believe that if Bitcoin consolidates for too long, altcoins could outperform for a short phase. This is supported by early signals that Bitcoin's market dominance has been weakening. If that trend continues, we might see a broader distribution of capital across the top 50 coins, with sudden bursts of price action in places the market least expects. For investors, this is both exciting and dangerous territory, because opportunities are real but so are the risks. The current environment favors traders who understand momentum and can adapt quickly. Those who chase rallies without a plan are the ones most likely to be caught in reversals. This is why many voices in the market are emphasizing discipline and timing. Buying strength only works when the trend is confirmed, and holding too long without adjusting positions can be costly when sentiment turns sour. For the broader crypto community, today's mixed performance feels like a calm before either a big breakout or a correction. The data and flows suggest that institutions are still active but cautious, retail interest is slowly returning, and volatility is likely to remain high. Everyone is watching for that one decisive move from Bitcoin that could either lift confidence across the board or trigger another sell-off. As always, the message remains the same. Do your own research, stay informed, and don't get carried away by hype or fear. The market is showing both opportunity and warning signs at the same time. Traders who stay balanced and adaptable are the ones who will benefit most from whatever comes next. Crypto has always been a game of patience, timing, and awareness, and right now those three qualities matter more than ever. Like and subscribe our channel for more updates. Stay connected.